Welcome back to Crypto Wonder World. Today, we bring you a critical alert, a message that requires your immediate attention, especially if you are an investor in Hedera HBAR. While much of the crypto market remains fixated on short-term price charts and fleeting narratives, a timeline has been exposed. This isn't a timeline found in a public roadmap or a marketing document. It's a timeline revealed through the deliberate actions of the world's largest corporations, the accelerating pace of global regulation, and the maturation of a technology so advanced it was built for a future that is now arriving. They have just exposed the timeline for HBAR's transition from a quiet, enterprise-focused project into the foundational trust layer for a new generation of the Internet. This isn't speculation. It's a convergence of powerful, real-world events. If you hold HBAR, you must pay attention, because understanding this timeline is the key to understanding the immense potential that is about to be unlocked. The quiet phase is over. The clock is ticking. The Council's cadence, decoding the actions of global titans. The first and most powerful component of this exposed timeline is not written in words, but in the deliberate actions of the Hedera Governing Council. This is, without question, HBAR's greatest strategic advantage. We are not talking about flimsy partnerships. We are talking about a governing body composed of over 24 of the world's most powerful and trusted multinational corporations and universities, including Google, IBM, Boeing, Dell, LG, Standard Bank, Ubisoft, and ServiceNow. To understand the timeline, you must stop looking at Hedera as a crypto project and start seeing it as a strategic initiative being driven by these global giants. The timeline they have exposed is one of phased, enterprise-level integration. In late 2024 and throughout the first half of 2025, we have moved past the exploration phase. Council members are no longer just running nodes to test the technology. They are actively building and deploying commercial-grade applications on the network. Google Cloud is not just a council member. It is actively providing its cloud infrastructure for the Hedera Network and offering Hedera's consensus service as a core component for its enterprise clients building decentralized applications. This signals their timeline for offering Web3 services to their massive customer base. IBM, a global leader in enterprise solutions, has been leveraging Hedera for projects requiring verifiable data and high-performance DLT, particularly within supply chain and enterprise blockchain solutions. Their internal development timelines are now becoming external product offerings. ServiceNow, a giant in enterprise workflow automation, has integrated Hedera's technology to bring a new level of trust and auditability to digital workflows. The timeline for their customers to begin utilizing these features is now. These are not isolated events. This is a coordinated cadence. When a company like Boeing explores Hedera for aviation supply chain applications, or when Standard Bank leverages it for cross-border payment solutions in Africa, they operate on strict, internal corporate timelines for development, testing, and deployment. By analyzing their public statements, their participation in industry forums, and their product announcements, we can piece together a clear timeline. The pilot programs of 2023 to 2024 are becoming the production-level rollouts of 2025 to 2026. The council members are not just lending their names. They are integrating Hedera into their core business strategies on a schedule that is now becoming visible. This is the institutional timeline, and it is accelerating. The use case maturity cycle, ESG, RWAs, and the inevitable demand. The second part of the exposed timeline is linked to the maturation cycle of Hedera's key use cases. The demand for HBAR's utility is not abstract. It is being driven by tangible, multi-trillion-dollar industries reaching a critical inflection point. First, let's consider ESG, environmental, social, and governance and sustainability reporting. As of 2025, new, stringent climate disclosure regulations are coming into effect in Europe, North America, and parts of Asia. Corporations are now required by law to provide auditable, verifiable proof of their carbon footprint, their supply chain ethics, and their sustainability metrics. This has created an urgent, multi-billion-dollar market for trusted data reporting. Hedera, with platforms like The Guardian built on its network, is the undisputed leader in this space. Its ability to provide an immutable, low-cost, and high-throughput ledger for recording sensor data, carbon credits, and supply chain events is a perfect fit. The regulatory deadlines for ESG reporting have, in effect, created a hard deadline for the adoption of technologies like Hedera. The timeline isn't set by Hedera. It's being set by global regulators, and it's happening now. Second is the explosion in real-world asset RWA tokenization. While the entire crypto space talks about this, Hedera's enterprise-first approach gives it a unique advantage. Financial institutions and corporations looking to tokenize high-value assets like real estate, bonds, or intellectual property require a ledger with institutional-grade security, performance, and governance. They cannot afford the risks of network forks, volatile transaction fees, or questionable security that plague other platforms. Hedera's Hashgraph consensus and its governing council model provide the exact level of assurance these institutions need. As major asset managers begin to tokenize their first funds and real estate portfolios in 2025, Hedera is a primary destination for these assets. Platforms like Toko, developed by law firm DLA Piper on Hedera, are already providing the legal and technical framework for this. The timeline for RWA tokenization is no longer a 10-year vision. It's a 24-month strategic priority for nearly every major financial institution. These use cases, ESG and RWAs, are not speculative. They are driven by immense, real-world economic and regulatory pressures. The timeline for their mass adoption has been exposed, and it points to a dramatic increase in the demand for BAR's network utility in the immediate future. The technology readiness timeline, why ABFT and Hashgraph matter now. The timeline for adoption is only relevant if the underlying technology is ready to meet the moment. For Hedera, its unique Hashgraph consensus algorithm and its achievement of asynchronous Byzantine fault tolerance (ABFT) are no longer just theoretical advantages. They are now critical, market-ready differentiators. This is the third, and perhaps most crucial, part of the exposed timeline. For years, the market has been obsessed with the blockchain trilemma, the idea that you can't have speed, security, and decentralization all at once. Hedera's Hashgraph offers a practical solution. Its achievement of ABFT is the gold standard for security in distributed systems. It mathematically proves that the network is resistant to attack, providing a level of assurance that is simply not present in many other networks. For an enterprise handling billions in tokenized assets or a government running a critical public registry, this is not a nice-to-have. It is a fundamental requirement. Furthermore, the performance of the network, its ability to handle tens of thousands of transactions per second with finality in 3 to 5 seconds, is now perfectly aligned with the needs of the market. The early days of crypto could tolerate slow block times and probabilistic finality. But the future of finance, the world of real-time payments, IoT data streams, and tokenized securities trading cannot. It demands the instant, irreversible finality that Hedera provides. Perhaps most importantly for the current economic climate, Hedera's transaction fees are low, stable, and denominated in US dollars. A simple transaction costs a fraction of a cent, $0.0001, and this price is predictable. This is a stark contrast to the volatile, unpredictable, and often exorbitant gas fees on other platforms, which make it impossible for an enterprise to build a sustainable business model. The technology readiness timeline has been reached. The security is there, ABFT. The performance is there, high throughput, fast finality. The economic model is there, low, predictable fees. The technology that once seemed futuristic is now perfectly suited for the demands of the present moment. The platform is no longer in a beta phase. It is fully operational and ready to handle the immense transactional load that its enterprise partners are preparing to bring on-chain. This technological maturity is a clear signal that the timeline for mass utilization is no longer on the horizon. It is here, the regulatory and compliance gauntlet, how Hedera was built for the endgame. The fourth dimension of the timeline that has been exposed is the global regulatory gauntlet. As we are seeing in mid-2025, regulators across the world, led by the US and Europe, are no longer taking a hands-off approach. They are actively cracking down on projects without clear utility, those with centralized points of failure that resemble unregistered securities, and those that cannot meet stringent AML, anti-money laundering, and KYC, know your customer requirements. This regulatory crackdown is acting as another great filter, and it's a filter that Hedera was fundamentally built to pass. Hedera's approach has always been one of proactive compliance. Its unique governance model, where a council of globally diverse and respected enterprises makes decisions, was specifically designed to avoid the pitfalls of centralized foundations or anonymous development teams that have drawn regulatory scrutiny elsewhere. This structure provides a clear line of accountability and governance that regulators understand and can engage with. Furthermore, Hedera's architecture allows for optional, feature-level compliance. For example, its token service allows issuers to build in KYC and AML checks directly into the tokens themselves. This means a financial institution can issue a tokenized security on Hedera that is fully compliant with securities laws, a feature that is absolutely critical for the RWA market. As other crypto projects are now scrambling to adapt to new regulations or are facing existential legal challenges, Hedera finds itself in an incredibly powerful position. It is already aligned with the direction that global regulation is heading. The timeline for regulatory clarity is, for many projects, a timeline of existential risk. For Hedera, it is a timeline of opportunity. As the regulatory walls close in on non-compliant and purely speculative projects, the flow of institutional and enterprise capital will be increasingly funneled towards the safe haven networks that have prioritized compliance from day one. This regulatory timeline is, in effect, accelerating Hedera's adoption curve. Enterprises looking to build on blockchain technology are increasingly risk-averse. They will not choose a platform with an uncertain legal future. They will choose the platform that offers performance, security, and, most importantly, regulatory peace of mind. The timeline has been exposed, and it clearly shows that the regulatory endgame favors networks built like Hedera. The investor's edge, preparing for the great rotation into utility. So, what does this exposed timeline, a timeline dictated by corporate deployments, real-world use case maturity, technological readiness, and a global regulatory crackdown, mean for you, the HBAR holder? It means you must prepare for the great rotation. This is the profound market shift where capital, both institutional and eventually retail, begins to migrate away from speculative, narrative-driven assets and into projects with demonstrable foundational utility. The very quietness that may have been a source of frustration is now your greatest strategic advantage. First, you must prepare your mindset. Stop viewing HBAR through the lens of a typical volatile altcoin. You are holding a stake in what is effectively a new-age enterprise software company, a foundational trust layer for the digital economy. Its value will not be driven by hype cycles, but by transactional throughput and network utilization. Your focus should shift from daily price action to tracking the number of active enterprise accounts, the growth of transactions on the Hedera consensus service and token service, and the major applications being built and deployed by the governing council members. Second, prepare by understanding the value proposition. HBAR is the fuel of this enterprise-grade network. Every transaction, every token creation, every smart contract execution consumes a small amount of HBAR. While individual fees are tiny, the model is built for billions, even trillions of transactions. As major corporations move their operations on-chain, the cumulative demand for HBAR as network fuel is designed to be immense and sustained. This is a utility-driven economic model, not a speculative one. The timeline has been exposed not by a white paper, but by the convergence of real-world events. The corporate world needs solutions now. The regulatory environment is demanding compliance now. Hedera's technology is ready now. This is the trifecta that precedes institutional-level adoption at scale. The shocking truth is that the market is still pricing HBAR based on the old crypto paradigms of hype and speculation. It has not yet priced in its role as a core piece of enterprise infrastructure for the tokenized economy. This disconnect between its current market valuation and its deep, infrastructural integration is your opportunity. The silence is the sound of institutions accumulating and building. The next run for HBAR won't be a speculative pump. It will be a fundamental repricing as the world wakes up to the timeline that has been hidden in plain sight. Welcome to Crypto Wonder World. If this analysis has opened your eyes to the powerful, quiet moves being made by Hedera, hit that subscribe button and ring the notification bell. We are here to decode the signals that matter, to track the institutional adoption that will define the future, and to prepare you for the next great wave in digital finance. The timeline is clear. The opportunity is now.